That's the $1 million question.
Whoa, now it's moving.
Expectations. Chief Executive Tim Cook blamed this on forex headwinds and weakness in emerging markets. Earlier, we caught up with Reuters correspondent Stephen Nellis to find out why this guidance might alarm investors.
Really closely for the forecast because they want to know if Apple is going to sell a whole lot of iPhones.
CBS's quarterly sales and profit beat The Street, the TV broadcaster and media company behind popular shows like The Big Bang Theory, said ad sales rose 14% in the period. Higher digital subscriptions also behind the strength. In the black. And that's today's morning call. Don't forget to follow us at Reuters Insider and watch more videos on Reuters.com.
Jobs numbers coming out every month raise questions about what's going on with the economy overall and how the Federal Reserve is likely to react. But on the front lines are the CEOs making day-to-day decisions about employment and capital investment and how to respond to customers. Welcome now one of those frontline CEOs. He is Andrew Kogan, Knoll Chairman and CEO. So Andrew, welcome back.
Thank you.
Good to have you here. So give us an insight from your point of view as we look toward these jobs numbers. How are you seeing the economy? How is your job situation, specifically in a wage situation?
Well, we're seeing a couple things. When we look at our clients, which are, across North America and around the world, we're seeing seeing pretty robust hiring, and what's happening is they're competing to attract talent. I think they're finding some constraints in the market, and so the workplace becomes a key tool in attracting and retaining talent, and that's a great thing for our business.
So they're spending more on, for example, office furniture. Not that you're only office furniture, but you are.
Right. Well, I just did a trip through some of our West Coast clients a couple of weeks ago, and we're in kind of these new workplaces they're creating, and a lot of them are in the midst of upgrading their facilities because in those high tech parts of the country, they're really competing for talent. And part of that is the culture of the workplace, is the environment they're creating. And so the importance of both kind of height adjustability, as well as creating kind of a more hospitable, residential kind of environment. And that's where both our residential and office skills come together. And I think we uniquely can fulfill some of those needs.
Residential. I didn't know that one before.
I did not know that one. So you raise a good point, because when we talk about competing for labor, part of the story is obviously wages, but are you seeing that more in the holistic environment point of view, that it's not just about moving someone with a big fat paycheck?
Yes, we are. And in fact, when you look at kind of millennials coming to the workplace and you look at what the criteria they're using to determine where they take a job, I think as much, I mean, obviously wages are one and benefits are two, but you get beyond that, and it's actually the physical environment, the culture, and we're seeing an acceleration of companies trying to compete to attract talent, and the physical environment says a lot about what the culture of your workplace is.
Interesting. Constant Hunter of KPMG and Subhad Rajappa of SocGen still with us. Constant, you have a question?
Yeah, so, I mean, I love this residential. That's a great, that's a new mashup. I haven't heard that one. But I'm wondering, at your firm, are you seeing shortages? And if you're seeing shortages, are you raising wages? Or are you using other means to attract
We have
workers?
about 3,800 associates around the world. We do a lot of manufacturing in North America. We have 4 North American manufacturing plants and 2 European manufacturing plants. We're in a business that actually kind of ramps up in the fourth quarter. And what we are seeing in some of our kind of North American locations is some pressure on finding temp workers. Where it used to be easier at this time of year, we're seeing a little more competition. Not tremendous wage pressure, but just kind of finding talent and bringing people in for seasonal, temporary jobs. That's really where we've seen the pressure right now.
Andrea, as we've gone through this earnings season, we've seen a lot of companies sort of warning going out that maybe it won't be growing as fast. A lot of concern about sugar highs coming off of them because of tax cuts. For your business or for your customers, are you seeing any of that? That people are concerned it's going to rein in some of the growth that we've had?
We're not seeing that. I mean, we're continuing to see a robust pipeline of activity.
I just got a storage box full of pizza.
These kind of residential or ancillary office accelerating. So we feel pretty good about all that. The challenges we've dealt with are kind of inflation, tariffs on the horizon. Those are some of the things that I think are, causing, some concern in the market.
So talk to us about tariff, about trade issues, because it's in the news right today with possible resolution that President Trump is talking.
Which I think would be great.
How does it affect your business and your customers' business?
Well, again, we're a U.S. manufacturer.
Pop open my U.S. dirty chart.
So we have, again, 4 manufacturing plants
Even
in
though
North
I have no
America,
intention of
2,000
ever trading
workers
it,
in our associates in our plants in North America. But we use a lot of imported materials that we assemble here in the U.S. And as those costs rise and as we get tariffs on those, it actually incents us not to do as much in America. So we're hopeful that there's some resolution and that we continue to go forward. It's also been an enormous distraction because we have teams of people around the world trying to find alternate supply chains, move things around, when I think there's a lot more productive things we could be doing. So
do you get the sense at all from your clients or from you that there's a lot of money being held back in hiring or spending or growing the business because of tariffs?
I don't think so. I mean, I think it does put some pressure on prices. I mean, we've had 2 price increases this year and everything. Depending on where the tariffs go, we'll have to assess what we do next year. But
so that's it then. Someone's just quit trading.
Investing in their workplaces. And we are
Yeah, now they have something better to do.
Between how people live and how people
Oh, my cat has some problems.
The center of what people are trying to do in offices. Group spaces, that's really where the action is, and we're really well positioned both organically and through acquisitions we've made to respond to those changing work trends. So we're quite optimistic as we head into the end of this year and into next year.
Yeah, this is an optimistic story, both for Knoll and for your customers.
Absolutely.
Looking into 2019, where do you see the risk? What's your biggest risk you're concerned
Well, I think the biggest risks really are on the input price pressures that we're facing.
Dollar is going up.
On the labor side, but really
Sorry?
on the commodity side. We've seen transportation inflation pretty significantly this past year. We've seen metals. We use a lot of aluminum and steel. and then potentially on some of the imported components. But overall, I think it's a pretty positive environment, and it's an environment where, frankly, the trends in the workplace are supportive of our margins expanding, because we move outside of some of the individual areas to these residential, newer models, height adjustable performance. Those are all margin accretive to us.
Which, Constance, brings up the whole, like, what sectors wind up having pricing power and which ones don't, and which ones will be sticky. Like, how do you view that?
Well, that gets into really detailed aspects of microeconomics and the elasticity of demand for certain things. But it's interesting to hear you say that you were able to raise prices, and yet you're still seeing demand increase. So that speaks to the general health of the U.S. economy and sort of the robustness of demand that we're seeing.
Also, we're very aligned, on the coast, in terms of financial services, legal accounting, tech out in the West Coast, and even energy now. You were all talking about Exxon earlier and everything. And we're seeing our energy clients start to spend and invest again in workplaces after being quiet for a few years. So we're seeing lots of opportunity, particularly around that part of the United States.
And goodness knows the lawyers have the money to invest.
That's interesting. You called it.
The money always goes back to the lawyers.
2016, the day after the election, he's like, go long lawyers. He did.
Okay. Andrew Kogan, Knoll, Chairman and CEO, thanks so much for being here. Constance Hunter of KPMG and Subhadra Rajappa of Societe Generale will be staying with us. Coming up, the dollar is falling ahead of the United States jobs report. Jane Foley, Rabobank head of FX strategy, will be joining us next. This is Bloomberg.
Looks like dollar index has found support.
Not quite yet, but it kind of bounced on M15.
No, it's on a support right now. It bounced off a support. Fairly unimportant one, but support nonetheless.
Yeah, this actually looks good. On a bounce here on daily. It's a resistance becomes support zone.
Well, the dollar showing some weakness into the jobs report. The dollar index down by about 96, although you do have the yen and the pound slipping lower against the dollar, which is a reversal from earlier this morning. So joining us now to take us through the numbers and the potential impact on the FX market, Jane Foley, Rabobank head of FX strategy. Jane, good to see you. How will the dollar respond to positive news?
Well, of course, what the number we're looking at is the earnings number.
Looks like last month there was a huge deficit.
But it could be impacted once again this month by weather.
In the non-farm payroll.
Even if we're looking at a number
previous compared to consensus compared to actual.
It's almost semantics, because we know that there is a tight labour market in the US, almost irrespective of the payroll, the headline number that we get today. But what we don't know is how much is that feeding through into wage inflation. Wage inflation, of course, has been really very soft compared with other economic cycles, and that, of course, is a characteristic throughout the G10 right now. So we are anticipating that we will get more wage inflation, and that really should confirm what the market knows already, which is that there's a very, very strong risk that the Fed will be hiking interest rates again, probably another few times. So because there's a lot priced in, maybe upside for the dollar is maybe limited even on a strong earnings number. particularly today, because particularly today, of course, there's been so much emphasis on the stories about trade, and that, I think, is going to be the greater influence today rather than the payrolls report.
So do we stay range-bound here for the dollar? We did have a breakout. Do you think that we're capped here then?
Well, you know, I think there is a will they, won't they, and this with respect to whether or not there is going to be a deal between the US and China on trade. And this will they, won't they could carry on really until we get that G20 meeting later on in the month. That's the one where Trump has indicated there could be a deal on trade. And I think from then we're going to be trading the headlines to say whether or not there really is, because there's a lot of skepticism, perhaps particularly in Europe, that there may not be a trade deal, that maybe Trump's headlines about the trade deal was just to boost the stock market ahead of the midterms. So we really do need to see something a little bit more concrete for that. If we do get that, yes, we could see a softer dollar, we could see a movement back into risky assets, into EM, as the market begins to take a bit more of an optimistic view on world trade than it was just a few weeks ago. But there is a lot of skepticism, and trade is really where I think where the direction is going to come from in the next few weeks.
Jane, today we're focused on the United States in part because of trade, as you say, the news overnight, as well as the jobs numbers today. But Europe also has a lot going on that affects the euro, whether it's Brexit or whether it's what's going on with Italy. As you look out over the next 30, 60 days, which is going to be driving that cross more? Is it developments on your side over in Europe, or is it back here?
Well, I think if we're looking in a 30 to 60 days, I think almost certainly it's going to be related to trade and the impact on whether or not there's a trade deal between the US and China, and the impact on that on global flows into risky assets, and the impact of that back onto the dollar. However, I think that is a very interesting question, because I think as we look ahead, particularly into 2019, I do think that we have the slow burn, which is a more gloomy outlook for European politics. So we do, of course, we know that we have the populace in Italy, we've got the budget issues in Italy, but now we've got the likelihood that Merkel's power base is weakening. And that could be a negative outlook, really, for the euro, for many investors. This view that maybe populists are getting a stronger foothold in Europe, and that might mean that perhaps there's going to be less emphasis, perhaps, on fiscal reform, maybe, on the budgetary issues, on budgetary prudence. So that there are some negatives, certainly, in European politics, and that could become a negative factor for the euro in the months ahead, into 2019. And then, of course, we have the growth data. And recently, some of that data for Europe has not been so good. And that has implications for what the ECB does in policy in 2019 as well.
Can you not?
Jane, quickly, unfair question. What's the trade that you're going to be looking at today?
Well, I suppose you are looking at the dollar, but really, I think
there's
perhaps more room for disappointment for a softer dollar today on weaker data than the other way around.
All right, Jane Foley, Rabobank, you're going to be sticking with us. We're just about a minute away from the jobs report, so I want to give you a market check of where we sit. A lot of optimism right now in the stock market. It's definitely a risk on being spurred by the potential peace talks or good news out of China and U.S. and a President Trump meet on November 20th in Buenos Aires. Nice Dow Jones futures up by 231 points. Off the highs of the session, though, they were up by about 300 earlier. European stocks holding on to their gains, and it's really one of the outperformers over in Europe is technology. That sector up by about 2%. Interesting, because you see Apple still
Thanks, Fish.
in the pre-market.
Oh, sorry, that's the wrong number. That's the... Oh, no, it's correct. It's correct. The green one is the actual value, and the pink one is the estimate.
Sell the long end here in the U.S. yields up by 3
what is actual?
And copper and
Actual is green, but we don't have it yet.
Return now to Bloomberg's Kevin Cerulli, who's at the Labor Department with the jobs numbers. Kevin.
And the price chart is US Kiwi dollar.
Yeah, I'm shorting Kiwi US.
Expectations, the unemployment rate unchanged.
Non-farm payroll's good.
7% in October, unchanged from last month. That's still the lowest since December.
The Dow just spiked a little bit.
Average hourly earnings.
All the numbers look good. Canadian unemployment's down as well.
$27.30 year over year.
Wait, why is FX Street being so slow with this data?
3.1%.
Yeah, it's always running non-farm payroll. Every other time it's fine.
Hourly earnings increase since April of 2009, when it increased by 3.4%.
Just about every number's positive.
The U6 total unemployment ticked down to 7.4% this month. That was from 7.5% last month. Now we did have an
nice one.
in the labor participation rate to 62.
Private payrolls went up massively.
Over the past year.
Yep.
Some
From 1883 to 246. Non-farm 190 to 250.
Down from 134
These $8 though.
August revised up from 270,000 to 286,000. The bottom line.
Well, New Zealand dollar is just retraced completely.
I told you about it.
16,000. Now, if you really
why would I buy it though? Makes no sense.
Significant gains in all of the particular sectors last month. 36,000 additional jobs in healthcare, 32,000 in manufacturing, construction, 30,000 jobs, transportation and and warehousing, 25,000 jobs. The bottom line, the final jobs report number.
I'm buying the dollar by selling New Zealand dollar.
50,000 jobs added to the U.S. economy in October. The unemployment rate remained unchanged at 3.7%.
Okay, Kevin, terrific job. Thank you so much. That's Bloomberg's Kevin Cerulli reporting from the Department of Labor in Washington. Still with us here in New York, Constance Hunter of KPMG, Subhadra Rajappa of Societe Generale, and Jane Foley of Rabobank. So as the economist, we'll turn first to you. Constance, tell us your initial reaction. Big beat of the expectations on the number of jobs created. A little bit of downward revision for last month.
Right. So what I would do is I just take the smooth number of the 2 months. It's about 180,000, and say that that's right where we have been adding jobs over the past year and a half. It's a slightly slower rate. And really the thing to look at is that wage number, and then digging into which sectors were the sectors that caused an increase in wages.
So one of the things that, just looking at the breakdown here, manufacturing, 32,000 jobs, which is much above the last several months. So it looks like there's a big gain in manufacturing, for example.
Right. Well, I'm sure that there was a pullback in September as well, right? So, and I don't know what the...
Yeah, the non-farm payrolls are massively up, but the unemployment rate is the same. What does that mean? That's why nothing is moving.
Figuring out what's going on. We like to compare against the 6-month average to see what the trend is compared to that.
Subhadra, where do you short? Yep, I think that the market's reacting exactly the way I thought it would, in the fact that we've gotten a strong headline number. People are going to be willing to look past weakness in the September report, September revisions, and you also got a wage
broken.
number year over year. Our hourly earnings were above 3%. So that's, to me, is a very important psychological level. And
all I want to say is the Aussie dollar going back to bloody 70.
So where on the curve is going to see the most re-rating?
Who's this fucking Aussie
It's
cunt?
going to be from the belly of the curve, because the famine is
Oh man, don't be like that, man.
on the economic front or the fundamentals. You're going to see a
I thought I was the only fucking Aussie here.
Okay, Jane,
you dog.
Back in Aussie can, yeah, back in you kid.
FX. You said if there were weak numbers, it would affect.
Oh,
S&P's down.
Dollar.
Well, I think...
Oh yeah, it's dropping quite hard.
Of how you dig down into these numbers.
Oh, this is no fun. This is no fun.
Push ahead with its interest rate hike in Q4.
Bullshit.
Argue with that from
There's not a knife, this is a knife.
And that, of course, reaffirms the dollar's strength, if you like. So we do have a view that the dollar will continue to firm over the next 4 or 5 months or so. But I think the market still needs to know what's going to happen with that trade.
I mean, this economic data, you'd think the Dow would go up, right?
Yes, this is a dollar positive.
Yeah,
story,
well.
But a lot of the dollar positive implications of the Fed.
I mean, I haven't put in a position, but I'm just surprised.
Attention's swiftly going to turn next week back to what's going to happen between China and the US on trade.
The data isn't even out yet.
I want to get in here too, because there is a trade gap.
On payroll.
I want to get into.
On payrolls out.
They're all out.
FX Street is so slow today. What the hell?
Exports, though, if we want to look
FX Street, I've got the data straight away.
That's the lowest since February. So definitely
why don't I have the data?
On the trade front. But those
numbers
are actually really good. I mean, Subhadra, you have higher exports.
That's besides the point.
Like, all that seems to be a good thing. Can we handle higher rates
Okay, I've got the data now.
It's because we have solid growth.
I feel like the show's over already, though.
The repricing to
Yeah.
higher
Not really happening.
I think the market can easily handle higher yields. You're seeing a lot of strength. I mean, especially on the employment front, like we saw today.
This is where I go long and Wall Street.
Consumer. So, to me, that's the key. And as we know, a good portion of the U.S. GDP is
gold is nosediving.
So as long as employment is strong, you're going to see a strong consumer, and we should.
What's iron ore doing?
Higher yields in the back of that.
So, Constance, what do these numbers tell us, if anything, about the overall
not me,
economy? Because people have been expecting a slowdown in the fourth quarter. This certainly is not a slowdown. There are more people working and making more money.
He fucking dragger.
So let's.
Yeah, there is more people working and making more money, but the unemployment rate is staying the same. Yeah, right.
Doesn't make sense. It's rigged.
Potential GDP. One thing that I want to point out about this jobs number that I
might just
Yeah,
close
that
it
must be
positive
rigged.
30 pips, but I feel like I'll regret it if I do.
Looks like Trump's wall doesn't work, but the numbers are wrong.
From last month, from 61%
You probably did though.
65.7. So back to its 6
Well,
average.
obviously it doesn't include farm workers, private household employees, and not-for-profits. So you can have increased jobs in those sectors.
Before we jumped up
Yeah, maybe there's just like 1,000 more farmers.
growth rate.
No, non-farm you nugget.
The epicenter here.
Fuck's sake.
No.
Jobs number continue the narrative of we are in a
New Zealand dollar
global
just broke below.
non-synchronized growth here
Good
because
shit,
we're
good
not
shit.
seeing the same kind of
Oh,
growth.
I love it. Yo, this shit good.
I think that's right. I mean, if we go back to
What?
the beginning of this year, there was a lot of optimism.
Oh my God,
Central
good.
banks would be following suit from the Fed and hiking interest rates. There was expectations that maybe central banks such as the ECB or the Bank of Japan could even be hiking this year. Now we know that
I'm
that's
having
not
like
going to happen.
0.15%
So yes, we do have a lack of
gain
synchronization,
though.
and of course that explains one of the reasons why there's been broad-based dollar strength this year. And on these data, you know, that should continue, but of course it will be a lot of...
Well, like 5 years ago, a jump in the numbers like this, that would make the markets explode.
Thank you very much for being with us. Constance Hunter of
not these
KPMG
days.
will be staying with us. And now we want to get an update on what's making headlines outside the business world. For that,
Literally, me and SecX have the exact same
Thanks, David.
profit loss
Says US soldiers on the border with
on this
Mexico
news
may
trading.
fire on migrants who commit any
I'm
acts of
positive
violence.
0.8%.
In remarks at the White House yesterday, the president said people who cross into the country illegally would be detained
Boring.
in 10 cities as he revs up his base ahead of next week's midterm elections.
Anybody throwing
Yeah, I'm
stones,
just gonna
rocks,
close up,
like they
I
did
think.
to Mexico and the Mexican military, Mexican police, where they badly hurt police and soldiers of Mexico.
I wasn't gonna trade today
we will
anyway, so
consider that a firearm
I'll take a profit.
because there's not much difference
it's on
when you get hit
Friday.
in the face with a rock.
I'm done.
As you know, it was very violent a few days ago. Very, very violent.
The closest group of migrants is still hundreds of miles from the US border. Heroin, fentanyl and other opioids continue to be the highest drug threat in the United States. Preliminary figures show a record 72,000 deaths in 2017 from opioid-related overdoses across the country. Federal officials are also concerned that methamphetamine and cocaine use are rising in areas not known to be hotspots for those drugs. The Drug Enforcement Administration comes out with its National Drug Threat Assessment today. Global news, 24 hours a day on air
That was
and
boring.
TikTok on Twitter. Powered
Yeah, that was boring. I'm not gonna do that. Leave that on the YouTube.
I'm Emma Chandra, this is Bloomberg. Alex.
I think it's rare speculations that make it volatile move as big. It's not news anymore these days.
Share buybacks in the third quarter. It's going to be
That was no fun whatsoever.
Made myself a happy meal though.
Hey.
Looking hodlmybeer.
Yeah, I commented on that.
Oh. It's just about deep fried balls. I like that. It's nice.
Take a look and hold on my beer.
Am I late?
Yes.
Did I miss it? Oh.
Nothing happened.
Yeah, no, I guess it wouldn't.
Oh, I really want to play that.
Red Dead Redemption 2, beating up annoying feminist.
Oh, for God's sake, man.